Good afternoon, everyone. I'm just going to wait another minute and then we'll get started. Um, so today we're going to talk about PPP behind the scenes. Um, but as you know, Melinda's out. She is at her daughter's wedding. Her oldest is getting married this weekend. Um, so you're stuck with me. So I'm just going to give one more minute and then we'll see uh, if anybody else joins us. Okay. So for today, what we're going to do is we're going to talk about the timing of the PPP loan forgiveness application, 7 reasons why you won't be receiving forgiveness. Um, these are things that the bank is going to be looking for, as well as the SBA, to make sure that the bank did their job. I'm going to remind you all of the good faith certification that was made when you applied, and from the interim final rules from June 22nd, page 8, something that snuck by most of us that we think should be discussed. Uh, so the timing of your forgiveness application goes like this. You're going to apply, you have 10 months to apply from the end of your covered period. Most people, if you got your loan late April, early May, 10 months, you have 8 weeks, or you have 8 or 24 weeks. We suggest you go with 24 weeks just because they're not going to penalize you further. So that means if you're 24 weeks, you're close to November for your end of your covered period, so you have 10 months from then. So once you apply, the banks have 60 days to process your request. But what's also been hidden in these interim final rules is that every time the bank requests 60 new document, that 60-day timer restarts. So what I would expect to see is that most of these banks are going to wait till day 59 and then request some other new document that instead of having, so now they just given themselves an additional 60 days to review what you've given them. After that, the SBA has 90 days to approve what the bank has done. And sorry about that. They have 90 days to then approve it initially. So the thing about that is that they have 6 years to go back and audit what has been said before. The SBA is checking more of what the bank has done and less of what you've been done and prove it. They're going to do that afterwards. So they have the final authority and they're the ones that make the rulings. So more likely than not, though, most of you will not hear back for at least 150 days. That's almost 6 months. So you're going to have this loan on your books for next year. So 7 reasons that you may not receive full forgiveness. So this is borrowing incorrectly, and that could be that a good faith effort was not made, even though, or a good faith certification. That we're going to talk about that more in a minute. You receive too much. If you receive too much, you will not be getting full forgiveness. Or you included someone that you shouldn't have been including, like a 1099 contractor. You're not going to get forgiveness for paying them. If you spent it on non-allowed or non-forgivable uses, so let's say you have a lot of inventory that you needed to purchase to be ready for September. Well, that's not a PPP forgivable expense. The thing about this is that money is fungible though. So the bank doesn't actually know what dollar you spent on what, but they're going to want to make sure. So if you only spend things on inventory and no payroll, then it's going to be troublesome. But if you have $100,000 bank account, let's say, and you got 100,000 PPP, they can't tell which 100,000 is which 100,000. So it's something just to keep your mind on. Make sure that you spent the payroll. Don't apply if you are part of the group that has the 8-week covered period. Don't apply for forgiveness if you haven't spent it all on payroll. If you spent it on non-qualified, wait the extra time, spend it on payroll. If you spent it at the wrong time, you won't receive forgiveness. That's outside of your covered period, basically. So that's if you, let's say you got your loan at the end of April, but you've been carrying your staff since the beginning of March when you shut down. That payroll is essentially, I don't want to say lost or useless, but it's not forgivable in your eyes for the SBA. So if you have a drop in pay greater than 25%, that's going to reduce your forgiveness amount. Banks are going to be looking at this. That's why they ask you for some information. It's box 3 on the traditional form, or on the easy form, you actually have to certify that you did not do this. Anything like this will reduce the amount of payroll costs that you have, which then in turn, if you're right at that 60-40 split, will reduce greatly the amount of forgiveness that you're going to receive in total. A drop in headcount, that's going to issue. Banks are looking for that. They're going to look for that's why some banks are asking actually for your payroll journals and timesheets and things like that for February 15th, because that's the date they're supposed to be looking. And then the date that you apply is technically the end date, or December 30th if you're applying for forgiveness next year, December 31st, sorry. And they just want to make sure that you didn't lose anybody, that you didn't drop anybody's payroll. They're looking at, for pay, it's annualized. For pay, it's annualized. Headcount, they're doing the simplified method, 0.5 if they're under 40 hours, 1 if they're above 40 hours. Can decide to do it, calculate, okay, they're 0.71 employees. Or it's just, for a lot of the times, and for most cases, it's going to be easier and simpler if you do the simplified method. You have to do that on both times. So you can't do simplified for the before Corona and then actual afterwards. It's all or one. So a drop in headcount, though, that's going to reduce your total forgiveness. So if you reduce your staff by 20%, that will reduce your forgivable amount by 20%. If you spend disproportionately, banks are going to be looking at this. That's why a lot of them are asking for loans. They need to, one, verify our loan statements, rent agreement, leases, mortgages, things like utility bills. They want to make sure that you had this bill before and that it's all forgivable. So they're looking for that. And then obviously if you fail to prove that you qualify for forgiveness, you're not going to get it. It's use it or lose it. You apply, you're going to get it. If you don't, you're not going to get it. So basically though, so what this is looking at is, this is what the bank is looking for most often. They're looking to make sure you took the right amount. They're looking to make sure that you spent it correctly. Now, again, like I said, it's fungible. So can they tell that you spent this dollar on that? No. But they want to make sure that if they gave you $100,000, that $100,000 was spent on things that it should have been, and that it was spent at the right time. Banks are looking for a drop in pay and a drop in headcount. This money was meant so that your staff weren't laid off, so that they didn't go on unemployment. We like to refer to this as government or employer issued unemployment insurance in the office, just because that's what it was. Mainly it benefited the employees, landlords, utility companies. It didn't really benefit the actual businesses. So, and that's what banks care about. That's what they're being told to look for. That's why your payroll journals are one of the most important things, especially if you have hourly employees, because it will actually say on there 8 hours, $15 an hour. That's $90. So, it's explaining it all. What we like to do, we suggested paychecks for many of our clients. Paychecks, you can actually gather all of those reports in one simple document. So you can do from January 1st of this year to now, upload that to the bank. You're killing them with information. They have way more than they need. So it's less of a reason that they will come back and ask for more and restart that 60-day timer. So here's that good faith certification that I said we'd come back to. And something that this came up, this is what made Shake Shack and Ruth's Chris ineligible for actually receiving the PPP in the first place. And that was because the funds needed to be used to retain workers, pay financial payroll expenses, make mortgage and rent utility payments. All right, everybody knows that. But current uncertainty makes loans necessary to support ongoing operations with no ability to access other sources of liquidity sufficient to support ongoing operations in a manner not significantly detrimental to the business. So the last one, that's what made them ineligible. They could issue more stock, raise the $10 million that way. They chose not to. But for other people, you know, what might be an issue is number two. So if your business actually went up during this pandemic, and a couple of our clients' businesses have, where they're actually doing better because of client demand, or they were in the right industry, they sold online marketing, or they did biotech research. Your money, your resources, your revenue went up. So that may cause an issue later. And the reason for that is on the interim fund rules from June 22nd, they actually said that the SBA, so the key words here, SBA determines if it is reviewed borrower was ineligible for PPP loan based on loan application in terms of the application. So for example, lack of adequate basis for certifications of the good faith, it's made in the PPP loan application, loan is not eligible for forgiveness. So that's where that 6-year audit period comes in, and it's really important. And remember, the SBA and Treasury Department are going to have access to your tax returns. So that is something that they will find out. They're not going to be able to hide this. But basically what we're saying is that if you did not need the loan, there's a chance that they will find out and that they will not give you forgiveness. Now, let's hope that with the automatic forgiveness that's being discussed in Congress, this will be slid under the rug. They will lack an ability to find out about it, but that's not known right now. So one thing that you need to be thinking about before you apply is how's my income statement looking? My revenue up over the moon, or am I at levels that I was before? Am I down 20%? Am I up 40%? You want to make sure that you really did need this money, because there is the chance that they will tell you it's a loan, not forgiven. So if anybody has any questions, I'm here to help. I know it was very brief, but I wanted to save most of the stuff for when Melinda's back. She does enjoy doing these every week with you guys, so we're here to help you however you need it.
So, Joe, this is Bernard. I've got a question.
Yes.
Hi.
How are you today?
Good, good. How are you doing?
Good, thank you.
Great. Thanks for doing this, by the way.
Of course.
So if your company's revenue are down by greater than 25%, what does that mean? Is that a problem, or?
No, so they want your revenue to be down.
Okay.
That's kind of part of this good faith certificate or certification that you made, is that you're saying, my business, without this loan, my business would be unable to survive.
Yes.
So basically what they're saying is, if you don't need this money to survive, if this money is just the cherry on top during this pandemic, that you really didn't meet the terms of the loan, and it's going to be, we're not forgiving you. We're going to have to pay it back to us. For some of our clients, like I mentioned, if they sold online marketing, so all these online stores that now have this boom because nobody wants to go to the grocery store, nobody wants to go to Target, nobody wants to go here, their revenue has doubled in the past couple months.
Goodness.
And so, but they had applied for this money before their revenue hit. So it's kind of like walking that good faith certification line. Current uncertainty makes the loans necessary to support it. When I applied, but now that I'm applying for forgiveness, does that still make sense? Is current uncertainty still there? Our revenue's doubled. It's not uncertain. We've got the business. We can survive.
But if your revenues are down compared to the same period last year, you're fine.
I think that having the good faith certification for those cases is not what they meant. I wouldn't be worried.
Yeah. Okay. Thank you.
Thank you. I do want to apologize. Last week's video, for some reason, got corrupted. We had used Zoom back to back, and it messed up the recording. This week it is recording. It will go online. It will go to YouTube. And we will embed the video onto our website just as we did last week or 2 weeks ago. If anybody else has any questions, I'll be on for the next few minutes, but thank you all for attending. If you have any questions, feel free to reach out to us. Let us know how we can help. Thanks, everyone.
Thank you, Joe.
Thank you.
Bye-bye.